What's up, everybody? Welcome to another episode of Bag Talk. Today, we're going to tell you whether it's finally the right time to buy real estate because we just experienced a real estate market that took everybody out. I know it's been tough to find deals and everything, but we're going to go through some data today that's going to tell you the overview of what's been going on lately and whether it's finally time to dive back in because there have been some changes that we want to share with you. So, without further ado, Newsy, you want to share the data right quick?
Yeah, and everything we share will be in the description below, so y'all can follow along. But let's get into it, man. So I think the first thing we want to really go over is just the total chart, right? Like the total U.S. housing market overview. And before we dive into details, we have to make this clear that this is not related to a particular market. This is a national average. All right, so we can't dive into like per city or per state. But now that we got that out the way, let's talk about it, right? So if we scroll down right here, what this is essentially showing you guys is the U.S. housing market overview. So it shows you the median sales price, it shows you the number of houses sold, and then it shows you the national average 30-year fixed rate. So if you look at it right now, the number of homes sold is actually down. So 33% down year over year. What that means is as of last January, there were more homes being sold than now. And if you look at the 5-year chart, we're selling more homes than 2018 or 2019, but we have come down from last year at a 33% rate. And then this really relates to the actual mortgage rate because we see 6.3%. This obviously went up because of the interest rate hikes that have been occurring over the last year or so. So, Ro, what do you think about this and how does this really compare?
Yeah, so I kind of been thinking about it lately, how seasonality has been affecting real estate because there's definitely been a slowdown as far as like the heating of the housing market in the later months, the winter months. But I'm curious to see like how it picks up as we enter warmer months because that's when real estate starts to boom again. So I know like you said, since last January, things have cooled down, which is a great sign for buyers. Like that's a great sign. That's what we want to see. But it's not exactly where we need it to be yet. So there's a lot of work to do on bringing prices down. There's a lot of work to do on that side.
Yeah, and let's talk about that, right? Because there's two sides to real estate, guys. Like a lot of people just think about real estate, oh, people aren't buying, demand is low, all of a sudden prices go down, right? Or up, whatever it may be. There's another side, which is the supply. You can't just focus on demand, you get to focus on supply and demand, right? So when we think about it, and you come down here, let's talk about the US housing supply. So it says in January 2023, there were 1.2 million homes for sale in the United States. That's up 18.7% year over year. So there's more homes on the market, right? Supply is there. That's basically what it's saying. And when we look at it, the months of supply we have is 3, which is still up year over year. So we actually have supply that right now available to us, but it's nothing significant compared to what we've seen in the past. And that's also what's impacting the market, right?
Yeah, exactly. Because if you don't have a lot of homes on the market that's available to be bought, then what that's going to do is that's going to keep prices elevated. That's putting upward pressure on prices. So like we said, yes, we've had more homes available for sale or available on the market now than it was just recently in the heat of the real estate market, but it's not where it needs to be. Like, so yes, I want to see what happens as we make more homes available for sale as time goes on, because they're going to build more, et cetera, et cetera. And like you said, it's up 18.7% year over year. So there's definitely more homes in supply right now than it was just last year. But it's not good enough, bro. So that's why you see in real estate right now, affordability is tough. And that's why prices are still high as rates are still high. And it's tough. And if you look at it there, it says median days on market. It's 51 days that a home will be on market. That's the median right now. And that is up 25 days year over year as well, which shows that things are not moving as quickly as they were. Like before, remember, like just last year, you would see a house hit on the market, that thing would be gone from the market basically the next day. Like,
Yeah, we shared that with y'all. I mean, if you guys are old subscribers, you guys know this, that when Well and I were actually looking into buying real estate and doing our whole research, we put offers on property. We would literally put the offer in on Monday, and we're thinking we're going to hear back Tuesday, Wednesday, maybe because the market's hot. Bro, we would get a call back 2 hours later saying, yo, your offer's going to get accepted because people are paying way above asking. So that 51 day that you see is actually a huge difference. It's up year over year 25, but I would love to see like I think this number is actually even worse or better depending on how you want to look at it, because it was a day that markets were, turning around.
especially depending on the market too.
For sure, bro, for sure. We were looking at upstate New York, which is the crazy part, and it was still flipping like pancakes.
Facts.
So speaking of that, right? Like we're talking about home prices. This is something that always interests me, right? Guys, when you look at it, the number of homes sold above list price, right? It's down now. So it's down 21.4% year over year. So as of last January, it's actually down. Homes with price drops is actually up. And then sales to list price, once again, is down. And that's literally speaking on what Rel and I are talking about right now. So people are starting to not pay what they were paying initially. If you look at it over here, bro, this is ridiculous. In 2022, April, you see even May, June, people were paying more than 50% above asking. That's ridiculous. And in April and May of last year, it was even worse. But if you look at pre-pandemic, so where my mouse is right now, 2018, 2019, even 2020, like over around January, we're almost at the same point, low key, that we were before the pandemic. So would you say that's good or bad?
Now that's good. And it's more so even saying like not even that they're paying 50% above asking, it's more so the amount of people or the amount of homes that are being sold above asking. And
Yes, that's what I mean.
yeah, just to clarify for people. And yeah, like you said, like just like last summer, basically, bro, what'd you say? Almost
Yeah,
60%
so people,
above.
it was like 50%, 60%. This is really 60. It's almost hitting that 60 bar,
Bro,
but
that's
definitely
crazy.
above 50. And over here in 2021, it was easily above 50. It was like in that middle point between 50 and 60.
So then that's good because it's like, all right, most people are now starting to, that gives you negotiating power. Like, because
Mhm.
before it's like people paying way above asking, you can't even outbid it. And it's like only benefiting people who are extremely wealthy who could
Mhm.
afford that. So now it's like, all right, not so many homes are going over, above asking. And it's making it a lot of a more fair playing field, which is what we really want to see ultimately.
Like in Atlanta, for example, guys, like I literally remember listening to other podcasts, reading up on news. People were legitimately paying more than 100K above asking. So if the house was 500,000, they were willing to pay 600. They were willing to pay 750. And it's crazy because they actually made money back on that somehow. That's how insane the market was.
Facts.
So let's talk about that, right? So this chart, what this is essentially showing you guys, because since we're talking about these hot markets, is essentially are people living, and if they're moving out of that state, or are they staying in? So the purple is like they're staying in, and the darker orangish color is basically where they want to get out. So clearly, California, we won't even spend too much time on this, but Cali, people don't like it. A main reason for that is really that SF and that whole LA area. And then the lovely New York. People, more than 23K people were searching to move out of New York. Remember, 23K in Cali, it's 41K, nearly double, right? But keep this in mind. This Florida area, which is something you don't want to remember, more than 39K people were searching to move in to Florida. Just keep that in mind, right? And that's most likely, well, would you say, because of pricing and weather and the whole retirement movement?
Yeah, I would say so. That's pretty much what it is.
Right, exactly. Just keep that in mind, right? The reason why we're saying that is because this is what we want you guys to really focus on. Do you guys remember the whole hot markets that everyone's talking about? Like, yo, you gotta go to Arizona, you gotta go to Texas. That's where everyone is. Well, when you look at it, it's almost similar, but Miami, Florida is gaining a lot right now, right? Phoenix, Arizona is getting a lot. Vegas is getting a lot of attraction. And that's because, one, warmer markets, and two, better tax rates, right? Better advantages when it comes to businesses. So that's where a lot of people are moving and investing into versus what I just said earlier. SF, people don't want to be there no more, bro. New York, people don't want to be there. Cali, like LA, people don't want to be there. What does that say?
That's yeah, people trying to get out of them type of markets. And I think also it's kind of pointing to the whole work from home culture that
Mhm.
was created. Them high earners, they realize they could work from home. So why would you not live in a place that's like has optimal weather for you? You know what I mean? Like, wow,
And I think it's not even the weather. It's just SF is so like ridiculously expensive. When I travel there, they were talking
right.
about a lot of transplant people, meaning they're not from there. They're just moving there, right, and trying to work there now because they want SF to be home. But then they realized, yo, why would I pay that much money? There was literally a comedy show where people were talking about, as I went to, they were like, yeah, who's a software engineer here? Yep, who makes over $300,000 and pays $5,000 rent? I do. I love it. And then people were trying to leave because of that. It made no sense.
That's insane. And by SF for the people listening on the podcast, he means San Francisco.
Yes, sorry, San Francisco. But now that we got this data and charts for you, right? We need you guys to please like this video really quick because we're about to dive into what experts predict is happening and how it's all over the place. So make sure you like, make sure you subscribe, and make sure you comment. But Rel, let's get into it, bro. So the first thing I wanted to really talk about is actually this link, right? The first article, like right off the bat, it says housing market predictions for 2023. Are home prices finally becoming affordable? Everyone wants to know this answer. That's why you're watching this video right now. I hate to say it, guys. If you guys scroll down, and we will put this link in the description so you guys can follow along. Very, very long story short, this is what it says. Despite the mixed messages, some experts say that home shoppers have a reason to be hopeful. So there are mixed messages. People are saying there's stuff to be hopeful about, but why they're saying there's stuff to be hopeful about is because of this link right here. Let's talk about it. Housing market predictions for 2023. So KPMG, right, they're thinking that we're going to decline as much as 20% right here, which, Rel, would you say is extremely high?
I would say it's on the high end for sure.
Right? Goldman Sachs and Wells Fargo, they think 7.5 and 5.5%. So that's very different than 20%. Then we come over here. Another real estate investment firm thinks we're going to fall 5%. Redfin thinks we're going to fall 4%. And then you have Freddie and Fannie Mac thinking between 0 to 2%. So we've seen between 0 all the way up to 20 right now. So what does this mean, bro? Break it down.
That means that everyone, you know, it's funny. I heard something wise lately. They said if you're talking to somebody and they said that they know what's going to happen, then you know that they really don't know anything. Because the experts have pretty much shown us that no one knows what's going to happen. And I think that's okay. And I think people are not making it okay to understand that no one really knows, because there's a lot of shocks that's been happening to the economy. Like no one would have expected that in this high interest rate environment right now, the job market would be this strong. You know, we would be potentially even avoiding a recession as of where it stands. No one would have estimated that. So no one knows, like a lot of stuff that's going on right now is not even following historical trend because the factors are different. And so with that being said, I say that's why you see the disparity in these experts predicting what's going to happen in the housing market. Like, and so with that being said, it's like, all right, when I think about what, like my advice is to somebody who wants to buy homes right now, it really depends on your market, because some markets are going to be way more affordable than others. Some markets are going to see declines and some markets are going to still see increases. And that's exactly what's going on right now. And so one, it depends on your market. If you're in a market where you're seeing declines in prices, I would say, honestly, rates are probably going to go a little higher than they are right now.
Yeah.
So, you know, so I would say even you could wait some more and still get fire deals going later on in the year. If you're in the market right now where prices are still increasing, once again, rates will be going higher. So I would still wait in both scenarios because I think there are better deals coming, but don't get too greedy, because if in this environment, home prices are still going up in your area, you're in one of them type of areas. I ain't gonna lie. So don't get too greedy and start searching for deals sometime soon. That's what I would say.
Yeah, and I think at the end of the day, guys, like, look, if you have the funds available to buy a property and you're able to negotiate it, I think, yes, it obviously makes sense. But don't go out of your way to buy real estate. I've been hearing a lot of people say, I want to buy real estate, so I'm willing to pay whatever it is. It just doesn't make sense. You want to park your money where you can make the best rate of return, not just say, I bought a home and now I'm a homeowner. That just doesn't make sense for you guys, right? So unless you have the funds and you have the ability to invest in a property that makes sense, I would stray away right now.
And when you look at it, who right now is in the most danger zone when it comes to real estate? People who already had properties and watched it run up, or
Mhm.
the new home buyers that got in at the
It,
top.
it's the new home, and that's the thing, right? Like, if you bought pre-pandemic, you're kind of chilling, like you're good, right? But if you bought in the 2022 area and you paid above asking, like people are like, oh, it's going to continue going up. Yo, you're actually struggling right now, low key. Like, even if you're able to pay the funds, your market, like the actual value of your home, most likely according to the national average, declined. So
Hmm.
that's not something that's not a crowd that you want to be a part of, right? Which is why we always say, make sure you do your research, make sure you budget, right? You can listen to us as advice, but at the same time, y'all have to do your own research and research your markets. But that's basically all we have to say on this episode, I would say. And if you're still watching, thank you. We appreciate you. Please make sure you like, comment, and subscribe to the channel. Plus, hit that little notification bell because we drop
2 videos a week.
and you don't want to miss them. Make sure you check us out on Wednesday. But until then, peace.
Peace.
Soundstripe.